Hey there, random internet strangers. It's Random Crypto Guy with the worst crypto channel on YouTube. Dun 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 dun. Hooray! Bow chicka bow wow. Ooh, coo 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 coo. Alright, Bitcoin and Ethereum still stuck in a rut. How I determine when to enter Bitcoin. Fibonacci's! And more details on Sydney's salmon scalping, I hope, if I have time. So let's get right to it. I spent a lot of time trying to find some correlations between the Dixie, the dollar index, and the Bitcoin USD. I thought I had something, but apparently I was mistaken in that it didn't correlate. I was looking for an inverse correlation, and I couldn't quite find it. I found some stuff that was close, but not enough to really come up with anything definitive to show you guys. But anyway, you guys can find me at Random Crypto Guy at Forex_random. I also do Forex. Actually, that's where I got my start at. You can go to my website at randomforexguy.com, and you can read all about me, what I'm about, and where I think things are headed as far as cryptocurrency and the future and what's going on here. I don't really talk about that too much here on the channel. Mostly I'm here for just crypto, what I'm doing with my crypto, and you do you. That's the advice that I give you is not financial advice. It's just my opinion. You do you. You do your own research. I'm just one guy on one channel giving you 15 minutes of my time. So you can catch me on here. You can find out a little bit more about me, and then also on Random Forex Guy, not Random Crypto Guy. I didn't get that domain yet. Somebody probably grabbed it before me. But you can learn a little bit about where I think things are headed in the future. And that we are in our infancy in cryptocurrency. And I'm just kind of using this as a filler here for the dollar that I was trying to find that inverse correlation between the dollar and Bitcoin, but I couldn't find it. So we're just going to do just kind of a regular old recap of the week. And we have this is Ethereum on the daily chart, and we'll zoom in here a little bit and expand it out so you can see it a little bit better. You can see that we've got some red candles here that Ethereum has the support is holding, and then we have this new 4-hour support, this black box right here on top of the green box. So we have a double 4-hour support. It is holding. I'm a little bit hesitant upon that because I don't see a whole lot of new money coming into the market. A lot of the the millennials and stuff, they're doing their Robinhood accounts and buying, all that news and hype is going around of buying, like Hertz and bankrupt companies, and these stocks are skyrocketing. So people are still have a lot of faith in the legacy markets, and so I'm starting to doubt whether this is going to be a continuation or not, because while its support is holding, we have been just kind of stuck in this rut for now. We're going on, start from this candle right here, 2 weeks on here for Ethereum, and just going sideways action, and no new money's coming into the market, and the market cap is what's driving price. So and I don't, they're not giving out a lot of money. There's no new stimulus package for the masses here in the United States. I know across the world there are others, but I'm just not seeing it right now. I'm not seeing new money flowing in the market. It's still flowing into the legacy market through Robinhood, and that's posing a problem, I think. So I'm not super bullish, but I'm not bearish yet. Let's look at Bitcoin. Same thing. We've been going sideways in this channel for even longer. Going on 47 days, over a month and a half, and just going sideways. Not, I mean, you know, we got the same issue here. We got a 4-hour and another 4-hour here, but you know, red candles. We do have these two newer trend lines. These are the T1 and T2 trend lines. They are, you know, offering some support. We have some confluence here, but as I said, that's more of a happenstance because they are just following price. They're not driving price like supply and demand is. And so, I mean, we're kind of just hanging on here. I mean, I wouldn't really start to worry and get bearish till we started dipping into this area. Then I'd probably consider pulling and putting my money into USDC and riding out the storm. If I'm wrong, I can always jump back in. And I would still be making 8% interest on BlockFi. So that's what I would do with my Bitcoin. I don't know if I'd hold my Ethereum yet. That would depend on how hard and how fast things decide to break down here. Yeah, they're not. This isn't looking good. We got, you know, a lot of hummingbird beaks, a lot of indecision going on here. I'm just not seeing the bearish market like through here, where everybody's all excited, but that was all stimulus money from here to here. So this was April 22nd to, what's this at? May 9th. That was all stimulus money. That was all considered organic money coming in, and that's just not happening this time. My thread on Twitter goes and explains a little bit of what I think is happening about that. So I'm not going to go into that here. That's more political, and I try to stay away from politics on here, because then I'll get on a rant, and that won't be good for anybody. Let's move on. I was going to talk about Fibonacci. Let's go ahead and talk about that real quick, and why I kind of believe in it, but supply and demand is always king. So let's get our Fibonacci tool. We're going to start here at our low point down here for this run and go all the way up to our high point here at 10.4 or 10, where is it? Yeah, about 10.4. And we'll lay our Fibonacci down here, and you can see that the 23.6% Fibonacci retracement coincides right with our daily supply, right at the top of the daily supply. Now, once again, Fibonacci is another following indicator. It's following price. It's not driving price. However, you know, it could be used as another confluence tool, as if that Fibonacci is confluent with a supply and demand level, that's going to further strengthen that supply or that demand level. So because one of my first teachers, my first mentors, taught me that everybody is always looking at something, and looking at a collective market. And the more the stuff confluences together, the more people are going to believe that something is going to happen there. So it's going to create this self-fulfilling prophecy. Now, when I look at Fibonacci, I kind of just look at it as thirds and halves, like 23.6, that's a quarter. 38.8, that's a third. If you go in for a third, this would be still inside this demand zone, so that would strengthen it. So, and I just kind of eyeball Fibonacci. 50%, that's half the move. 61.8, that's 2/3 of a move. And then I guess some people talk about the 88. 88, I'm not sure where that would fall into. It's 8/10, 4/5. I don't know if 4/5 is really but it's just a mindset that we've learned to develop That's how we developed our math skills. That's how those math skills evolved. Evolutionary theory and evolutionary psychology is something that I've studied a little bit on my own, and I just found it fascinating that that's how we develop math, is through we gather up food and then we divide it in the pile of food into halves and quarters to distribute it equally, because we would help each other out as tribes to, because the tribe could survive better if everybody worked together. And my thread on Twitter also will probably go into that a little deeper detail on Twitter account. I don't want to talk about it too much here, but that's how I use Fibonacci. Is more of a confluence tool, very similar to how I use the trend lines. Like I said, I just eyeball it, and once in a while I'll throw a fib up there just to see if it confluences with. But it just clutters up the charts. If you throw enough spaghetti up on a chart, something's going to stick. So that's about it for Fibonacci. Let's move on to. We got a few minutes here. I'm going to move on real quick to try to finish this up. Just want to go through the past week of salmon scalping and what I'm looking for again. What I look for is we're going to look for an overlap, a session high between the euro and the United States dollar. And it has to be beyond this blue box. Now, this didn't happen today, but what did happen is we had a session low. So we look for the bounce up. When we get in here, we look for the color change. Here is our session low. We have a turncoat support. That means it has become resistance. So we're in a resistance level. We set our limit order right here. Bang. That would have been 34 pips. Not bad. If we use this as an exit, the two color change, that would have been 26 pips. If you had a target, there you go. So, and then moving on, that would have been a good day. I would have stopped right there, because anything beyond because that would have probably, as you can see, these didn't work out so well. You would have entered here. If you try to continue on the second attempt, that would have failed. And the third attempt would have failed as well. So that's something that was last Friday. Let's roll back. This is the big one I posted up on Facebook. This is the ideal setup here. You have a double top during the session after the news box. A double top. Here, 14 pips, 15 pips. Back to break even. Re-enter again. Boom. 62 pips. Done for the day. You could have continued on. I would have quit there at that point, but you could have continued. Got another 17, 18 pips. And then the spread gets too big. By around 4 or 4:30, the spread starts widening out for the swap. So you'd want to stay out. Let's roll back. This, I wouldn't have traded this. This was that was during the Powell was speaking. And when any of those guys speak in the afternoon, it's best just to stay out, because you don't know what they're going to say. We're looking for just slower times. Here's another good one. Double top, a little bit higher, but double top. First entry, bam, 17 pips. Second entry, maybe here, this might have been a stop out for this second one. Depending on where your stop was, that would have stopped out. But if you would have held on, maybe a break even here, maybe seven pips afterwards, depending on where your stop was. So still a winning day. Let's roll back. That doesn't count because it's inside the news box. Here's your doubles top right here. Where's our entry? This probably could, because it wasn't